From D.C., let's take it to Silicon Valley. Goldman Sachs. I thought this was interesting. I wanted to point it out to you guys. Goldman Sachs is proving, this is a good thing, that a Chinese wall, meaning impervious, is possible between its research department and investment banking and services business. So yesterday, among other revelations, Apple announced that in a partnership with Goldman Sachs, it will offer that thing on your screen. This fancy titanium new numberless credit card that will kick 1 to 2% cash back to the user. Today, Goldman Sachs analysts, led by a guy named Rod Hall, blurted out a gigantic yawn about that card. In a note out, the team today wrote, even though Apple Pay is becoming more available, we would still expect a large percentage of transactions to be done at the 1% return level. That's using the physical card. You get 2% if you use the phone app. So we would expect the typical consumer to perceive the cash return rate to be okay, but not great. He also went on to say that the card or any of the other announcements for that matter won't materially add much to Apple's bottom line. Apple was up until about the last hour or two. And what happened between that letter and now? Because that report came out this morning. Well, a trade judge recommended Qualcomm be granted a request for an import ban on some iPhones sold by Apple. They've been having this battle between Qualcomm and Apple. Decision still under review, but we do have Apple now totally reversing. It had been up about 1.3%. It's down nearly 1% right now. Markets are kind of following Apple with a move off session highs, but what was behind this 200-point jump in the Dow and the 100-point jump this morning in the NASDAQ? And why is some of it vaporizing? Let's get to our floor show traders. Teddy Weisberg. Boy, sentiment is sure fickle these days.
It sure is, Liz. The intraday volatility continues to be breathtaking, and it's been that way for, the last 5 or 7 years. But of course, what counts for investors is the overall direction of the market. And I think the market tone, in spite of all the issues that are out there, including the Fed message of last week, the bias continues to be positive, though frustrating, but still positive.
Alan, this morning, you guys get up even earlier because Chicago time is an hour earlier than we are. But you saw really strong futures and then a very strong open. So why the reversal here?
Well, I think it's just relaxing a bit. What I was impressed by was the market action yesterday after the sell-off that we had on Friday. The market continues to stair-step higher. Every time it sells off, it bounces back. Let's get to the Goldman comment for a second. Usually they've been known to talk their book, so I did notice that first thing this morning when I saw that commentary. But I think maybe they're jealous. Apple has outperformed Goldman Sachs in 2019. Apple's up 30%, Goldman's up 15%. Maybe they're just trying to even the score a little bit.
I like your thing. I'm not sure I agree with it, but I personally, you guys, was kind of encouraged by this because that was a big problem during the dot-com era where the research guys were really pressured in many cases in different investment banks by the investment banking guys that were kind of helping these big IPOs come to pass that were a little flimsy on the inside. Phil Flynn, we got some data this morning that I would have thought might tank the markets. In fact, we had the totally opposite move here. We saw big moves in both the Dow and the S&P and, of course, the NASDAQ too. But we got March consumer confidence down 7.3 points, and we got February housing starts down 8.7%. So data didn't have the punch that it has had in the past.
No, I don't think it does. And I think if you look at the housing starts, I think they're looking at the fact that there has been kind of a disconnect because of weather, because of the government shutdown, that's really skewered their numbers. But if you look at home builder confidence, they're the more confident that they ever had been. Consumer confidence, on the other hand, they're very fickle, right? If gasoline prices go up 6 weeks in a row, they start becoming unconfident because they're concerned about the economy. And so I think you see that short-term situation. But their behavior really tells you a different story. Because if you look at gasoline demand, for example, it's near a record high. They continue to drive. So they're continuing to spend money as well. So I think the market is looking at the preponderance of the data, not just these numbers, and say the trend of consumer confidence continues to be strong. The housing market looks like it's bottomed. Interest rates are low. So you're going to have a big bounce, I think, in the housing market this spring.
Yep, and if you believe the Fed funds futures, interest rates may go even lower if the Fed decides to suddenly cut. I mean, that is unbelievable. Good to see all of you guys, Teddy, Alan, Phil. We'll see you next time. Closing bell, we are about 47 minutes away from hearing it clang, and with that, the Dow is still up about 106 points. Coming up, everyone from the Heartland's farmers to the Motor City and the people who work in Detroit to Silicon Valley, watching with bated breath as President Trump holds a closed-door meeting about the future of the U.S.-Mexico-Canada trade agreement. We are waiting to see whether President Trump talks before his big meeting. He might. Our cameras are there. We'll take you there live if he does. And wishful thinking or a done deal? Charlie Gasparino running to our set right now. How DC odds makers are calling this Magenta mega merger even before the regulators do? Charlie breaks it next on Countdown. Don't go away.